Hello and welcome back to Volatility 411. I'm Kevin Davitt, part of SIBO's Options Institute, and this is Monday, January 4th. A very happy new year. Now, last week, most U.S. indices continued their advance and closed 2020 at or just off all-time highs. Futures were up this morning, but quickly reversed course after the U.S. cash open. The S&P 500 is down about 1.5% as I sit here, and the VIX Index is higher by 375 to 26.5. There has not been a VIX Index close over 26 since just after the election. I'll be watching to see where things end up after today's session. The VIX Index average close last year was 29.3. That was the highest annual average since 2009 when it measured 31.5 on average. For those who have been following the recent outperformance on the part of small cap, particularly the Russell 2000 Index, the RVX, which is the VIX measurement for the Russell 2000, is back to 3370. Now looking at VIX term structure, the spread between front-month January futures and February remains in contango. Feb is trading about 90 cents over, but that's narrowed from around 180 on last Thursday's close. The rest of the futures curve is very flat around 26.5. In VIX options trading, shortly after the cash open, the March 22-19 put spread looks like it traded 10,000 times at 120. The most that spread could be worth is 3 in the event that it's held until March expiration and the futures expire below 19. The January 6th weekly VIX options remain active ahead of the Georgia Senate Runoff election, which happens tomorrow. The 30 strike calls have traded more than 1,100 times. They've traded between 30 cents and 65 cents. So, we begin the new year with some selling pressure and a higher measure for expected volatility. We'll see what shakes out in Georgia, which will determine the control of the Senate in D.C. Thank you all for tuning in, and again, a very happy new year.